and gentlemen, you're watching Startup Central and I'm Sumita Kareer. And if it's startups, technology, emerging businesses and the new economy interests you, well then this is the show that you should be watching weekdays at 6 p.m. to keep a track of all the developments in the space and how the Building in India story is shaping up. But developments aside, ladies and gentlemen, we also look forward to having loads of feedback, constructive conversations on the show as well. So do share your feedback with us at suc@etnow.tv. Do let us know what you'd like to watch on the show. On the show today, this is part 2 of our budget special series on what startups and venture capital funds are expecting from the Finance Minister come Saturday. The big point yesterday in the debate that we were having that came about was that a concerted push to manufacturing startups, deep tech startups, should be given via a multiple fund of funds. In fact, there was also a view that pools of domestic capital, multiple pools of domestic capital should be created to give a boost to startups that are coming in the new age tech space. But let's now then take that conversation forward with Siddharth, the managing partner at 341 Capital and co-chair Regulatory Affairs Committee at IVC, and get his thoughts on what the venture capital ecosystem is looking forward to, what really is the wish list. Siddharth, thanks very much for taking the time out and speaking with us right here on ET Now.
Sumita, you guys always end up capturing the entire pulse of the VC, private equity and startup market. It's an honor to be here. I think the biggest thing we're looking for in the industry as of now is two main plans. One is parity, the other is clarity. We want parity with international standards and benchmark Indian regulation and Indian taxation to what the rest of the world ends up actually doing. We've grown as an industry, in the AF industry has actually grown at a remarkable 111% CAGR from September 30th, 2012 all the way to 31st of December 2024. That's a remarkable rate of growth that is only paralleled by the rise of the startup economy in the country itself. And despite not having parity with foreign funds for that matter, we managed to see this level of growth. Now that the capital formation is actually decreased coming in through AIFs, it's very important that the government ends up actually tackling these low-hanging fruits and give us a parity that we end up needing. So when a foreign investor looks at a fund manager, domicile or the tax treatment afforded to foreign funds versus domestic funds should not end up being a question that ends up coming in. The government gave us parity with listed markets. We now want parity with foreign funds in terms of what they end up getting. The next part that we believe that is essential for our growth is going to be clarity. Too many of our Indian regulations do not reflect the way Indian AIFs or Indian funds operate as of now. Due to this, we've seen litigation end up actually increasing and an ever-increasing cost of compliance. In fact, the joke is that the cost of compliance is actually growing at a higher rate than the returns that AIFs end up actually generating to the investors. So we need this sort of clarity to end up coming in our regulation to ensure that these low-hanging fruit, these sort of issues for that matter, don't boil up and don't end up actually causing widespread dislocations for the entire industry itself.
All right, so very important points that you've mentioned, Siddharth, and let me elaborate a bit more on the compliances issue that you have raised. You say, because the government is of the opinion that, of course, there's been ease of business. This government has brought about ease of business. They are actively listening to the industry as well, and they claim that compliances have reduced. But here you're claiming the complete opposite. Can you throw some more light on this, on how further this can be achieved, and which are the pain points, to be very specific?
Yeah, I think compliance is a fairly broad-ranging subject. We have seen compliance reduce when it comes to incorporating a company, when it comes to liquidating a company, etc. But I think in terms of ease of operation, there's a lot more we need to end up actually doing. For example, there is material uncertainty on how the investments of an AIF can end up actually getting taxed as of now. Foreign funds, for that matter, any asset that they hold is classified as a capital asset, whereas AIFs have to rely on a patchwork of circulars issued by the CBDT to determine whether their operations constitutes business or whether their gains end up actually constituting capital gains or not. It's such a low-hanging fruit, and clarity was given in the year 2014 to foreign investors. Why are domestic funds being denied the same level of clarity itself? We have seen an ever-increasing pace of circulars end up actually coming about. In fact, the RBI issued a circular which effectively prohibited banks and NBFCs from investing into AIFs. Close to 10% of the capital raised by AIFs, by industry estimates, it now come under threat because of this itself. Why? Because there was regulatory disharmony between the way RBI perceived the industry versus the way the regulations have actually been written. So this sort of low-hanging fruit, this sort of disharmony needs to end up actually getting eased out. The finance minister promised us to end up actually creating a committee to look at the issues of private equity, venture capital funds and issue a report. I believe the report was issued. We're still waiting for the whole-scale implementation of this report to end up actually coming about itself. That's why the theme that we have from our side as of now is looking for clarity and looking for parity as well. matters relating to, let's say, capital formation, etc. My colleagues yesterday have already spoken about that. So I won't end up going more into detail on those same matters itself.
Okay, so clarity and parity, well, that seems to be the motto of IVC in the venture capital industry. But Siddharth, what about global direct listings? Is there an expectation that things will move in that direction?
I think there's a eternal hope from the minds of venture capitalists as well as startup entrepreneurs for that matter. But I think global direct listing is something we believe may end up happening a bit later. The government has allowed startups to end up actually listing on the stock exchange in GIFT IFSC, which is also an international exchange. And as assets end up getting listed on that particular exchange, we'll see a lot more liquidity to end up coming over there also. But I think listing on a NASDAQ or something for that matter is not a top of priority list for any startup. In fact, the most raging conversation in boardrooms across the country, besides flipping back to India for that matter, is to actually end up listing their companies either on the NSE or the BSE itself. So I think we did actually have this entire fascination with direct global listing, but a large amount of that has now actually come back to Gar Vapsi and to end up actually listing on the exchanges in India, as well as in GIFT IFSC.
Right. So, Siddharth, why I mentioned that particular point is because, there's been an ambition and aspiration from Indian startups to actually go abroad. And that's also the mantra of the Indian government as well. That is to make for India, not just to make for India, but to make for the global markets as well. Now, Siddharth, let me move to the other big point as far as this particular budget is concerned, because this is coming on the heels of global developments that are happening around AI. So whether it's a made in China DeepSeek or President Trump also unveiling a $500 billion Stargate initiative to boost AI. There was, of course, an announcement last year in the budget around AI, that corpus of over 10,000 crores. Are you expecting more this time around so far as boosting AI and deep techs, these particular sectors are concerned? And what can India do at this point to develop these sectors? Because there are quick global developments happening.
No, understood. I think, first and foremost is India doesn't have the same kind of R&D credits or tax incentives the way the US has and the way China has. In fact, if you look at it for that matter in the Income Tax Act, the government is trying as hard as possible to get rid of some of these tax incentives that are actually present. I think India needs to end up actually incentivizing global Indian companies as well as Indian entrepreneurs to end up actually investing into these kind of areas. We lack the kind of critical infrastructure needed and the compute needed to create our own OpenAI or DeepSeek. DeepSeek has actually shown that you don't need the kind of costs that an OpenAI or an Anthropic end up actually entailing. And India excels in the ability to end up actually putting very little capital investment, but actually generating very high returns. I think our space program, etc., testament to that. But the regulatory cholesterol and the regulatory restrictions on allowing this free flow of capital needs to end up actually going away. For example, only government grants can be given tax-free. The moment a grant is given by a private enterprise, there is ambiguity on what happens with regard to GST, ambiguity what happens with regard to income tax as well. I think all of us can recollect what happened to IIT Delhi when there was a GST notice that came up with them for some of the donations and some of the grants that they ended up actually getting and receiving. So this level of, I would say, low-hanging fruit needs to go away. Create a set of proper incentives, allow private participation to end up coming in. The 10,000 crore fund by the government of India should end up galvanizing at least 50,000 crores from industry. But for that, remedy the issues in the tax laws that prevent us from investing. For example, if you look at the charitable endowments or any of the university endowments in the country, they can't invest into AIFs. Why can't they invest into funds? In the US, in the 70s, when they allowed their pension funds and endowments to end up investing into their VC community and their startups, they saw the capital formation end up actually going up by a factor of 40 within a span of 10 years itself. India needs that kind of moment. Get rid of this regulatory restriction on Indian capital and stop suppressing Indian capital. Allow the market to decide what they want to do, and let market forces end up being guided by where they can best end up achieving a return on their investment.
Absolutely, Siddharth, because that's also been one of the key demands over these past few years, to create domestic pools of capital so that the reliance on foreign funds can really be lessened and minimized. And you are, of course, advocating for that, and, of course, regulatory pressure to get minimized. But coming back to the Make in India and Make for the World story, now, Indian startup ecosystem is currently the third largest in the world. What will it take precisely for Indian startups to make an impact on a global scale, and what really is needed? I mean, the government did initiate a fund of funds, and that led to some sort of ease of business also. But what more are VCs like yourselves advocating for, who've seen this, growth story of Indian startups firsthand?
No, I think that's actually a fantastic point. Some of our submissions that we made with the government also, as of now, are directly aligned with the government's theme of allowing our startups to actually go overseas. If you look at some of the RBI regulations or restrictions that come up as of now, for example, it's very hard to build a global SaaS company from India because every SaaS company across the world has automated billing that ends up coming on your credit card. Whereas in India, if you are a SaaS company and you wanted automated billing, you'll have to end up issuing your invoice in triplicate to your AD1 banker to allow them to end up actually processing that transaction. At one point in time, you'll have an accounts team that's going to be larger than your tech team. So allow for the RBI to end up actually allowing these sort of direct debits to come in on the credit cards that are there. I think that's actually number one. Number two, also for that matter, when you look at the exports, even though the government is doing a large amount to export, our export forms are still extremely cumbersome to end up actually going through. There are multiple layers of approvals, multiple undertakings, bonds, etc. you need to end up actually doing before you can end up exporting. In fact, even if foreign buyers want to buy Indian products from India, it becomes operationally challenging for these startups to end up actually going through the layers of compliance. So reduce amount of compliance that ends up actually getting entailed with that itself. Similarly, for example, if you look at any of the other sectors that there, if you look at medical devices and others, just trying to export from the country and trying to put them under the harmonious system of nomenclature becomes tough. You have to shoehorn an innovative startup into some sort of list that was actually written in the past 15 to 20 years. And any innocuous mistake can end up actually resulting in a raid or resulting in penal action. This actually scares entrepreneurs. So entrepreneurs, in fact, are actively getting seduced away by Dubai, Abu Dhabi, Singapore, etc. Say, come over here, keep your back office in India, end up actually exporting from here. And we are seeing some startups who have actually taken that up. Many of them want to stay back, but we need an environment that is conducive to allowing them to do so. And reducing the level of regulation. A regulation needs to be enforced. By increasing enforcement and reducing regulation, we will ensure that the bad actors are caught out and good actors don't end up actually getting caught. India tries to cure dandruff by decapitation. We go for carpet bombing as opposed to surgical strikes. I think our regulations have to be far more targeted to capture the ill rather than increasing the cost of compliance for everyone.
Right. So again, you're batting for regulatory clarity and reducing of regulations so that there is more ease of business in the ecosystem. Siddharth, one final question before we wrap up this discussion. What are your top three priorities that you'd expect the government to address on Saturday?
I think my top three priorities are going to be, number one, give investors clarity on how their gains are going to be taxed. I think that's going to be a long-term measure that's going to go great for everyone. Number two, especially when it comes to Indian startups also, I think our ESOP taxation is the most regressive in the entire world. We did have some level of change in 2021, which only extends to the small group of 1,500 INB registered startups. Let every startup in the country have an easier ESOP tax regime that the government has actually created. I think that's actually number two. Number three, also for that matter, if a startup wants to end up actually going global, reduce the amount of compliance required from the RBI for these startups to end up actually scaling and building global products. If we have these three changes, we will end up as well as unlocking Indian capital, we'll end up actually seeing this as a watershed budget that can end up actually propelling India and getting us closer towards Viksit Bharat as well.
All right, Siddharth, thank you very much for sharing your thoughts with us on what the big expectations are. And there is a whole list that the government could perhaps look at in terms of operationalizing some of these ideas and, of course, incorporating them as well. On that note, once again, thank you very much for sharing your thoughts with us. We'll come back to you once the budget is finally announced to really see which one of these have actually been heard by the Finance Minister. Ladies and gentlemen, time now for us to slip into a quick break, but lots more coming up on the other side. You don't go anywhere.